This is your boy Ramsey Jr. I teach crypto trading and uh, uh, analysis. Please pay close attention to what I'm about to teach. You grab one or two, and in case if you didn't get it, please do it to notify me through the comment section. Today we'll be talking about liquidity void. Just look straight to the sketch I drew on my whiteboard. You follow up from the beginning to the end so you can be able to understand it. But in case if you don't understand it, please do well to notify me through the comment section. Now when you look at this my drawing here, this is what they call, this line is what, this is what they call a liquidity. This is what they call price balance. From here is what they call price balance. This is what they call price balance. If you look closely, you will see what I draw here. Understand? This is what they call the price balance. Then I will show you a price imbalance. This is what they call the price balance. Then this long candle here is a price imbalance. You understand? Please follow up, and in case you do understand what I'm saying, do it to notify me to the comment section. If this is the first time I've seen my video, smash the subscription button, like, comment and share to enable you get more videos. Yes, so this is what they called a balance price action. Why this long candle here is what they called an imbalance. Now let's do a little experiment. Let's take, for instance, you have an orange that you are selling $500, and along the line the orange loses its value to let me say to $100. Yes, look at this sketch here. I drawed an orange and I drawed a price tag. Okay, let's say that you are selling your orange at the price of $100. Yes, and all of a sudden the orange lose its price from $100 to $10, and you wouldn't like to sell it because the actual price you are selling the orange is $100. So losing its value to $10, if you should sell your orange to $10, that means you are losing a lot. Yes, and in crypto market, we are talking about SMC. We are talking about big boys, guys that has knowledge, that deal with wisdom. A guy is full with wisdom. So when following them, you have to follow them tactically. Yes, so let's, for instance, you have orange, you are selling $100 and the price devalue to depreciate or devalue to $10, and you wouldn't like to sell it. Now for instance, this is your orange and this is your the price, the $100 you are selling the price, and all of a sudden the price started dropping until it gets here, and here is $10, and from here you wouldn't like to sell your orange here because it's $10, because if you sell it off here, actually you are losing a whole lot of money. When we go over to the chart, I will explain all these things to the chart. It's a live chart, you will understand it if you follow up. Now this is a $10 and this is a $100. You have your $100, you are selling it. Now what you will do is to wait for this price, for this orange that has devalued to $10 to get to here, to fill in an order. There's an empty order here. You understand? This is what you do to wait for this orange that has devalued to $10 to get to its normal price, to get from here, because it has devalued. So you wait for this orange to get from here to this normal $100. You understand? Before you can be able to sell it. Otherwise you will lose your money. That is how crypto market is. Yes, so let's take, for instance, now this is what they call market accumulation. You understand? This is an accumulation. You understand? It's an order that accumulated here. You understand? Yes, and this a candle. You understand? Just follow up. In case if you don't understand, please drop a comment, a question on my comment section. I will come and answer with immediate effect. Now let's go over to the chart. Let's go over to the chart. I believe with this little explanation here, you'll be able to understand it when we go over to the chart. Now let's go over to the chart. Now look from here. Price gets from here, from this man, from this bullish candle to here. You understand? And it's all these things are called imbalance. If you look at the board, if you look at what I draw here, you see that I even wrote it so that when looking at it, when watching the video, you understand it properly well. Now this thing here is called an imbalance, and this inefficiency. You understand? A bullish side is called an inefficiency, while a bearish side is called an imbalance. When you look closely, you see that price gets from here to here, and it creates what they call an imbalance. All these things is called an imbalance. So when you want to enter your trade, you won't enter your trade where you see that there is no imbalance, nor even efficiency, because these two things are the thing that will give you an IQ, that will give you, let me just say, an expo on how to enter your trade. These two things are the thing that will give you an IQ, an expo on how to enter your trade. You must see these two things, imbalance and inefficiency. I will still tell you how to enter your trade. So you can see there's belief that you can enter your trade in this. Although when I was doing the research, my analysis, I didn't have any intention of explaining how to enter a trade on this video, but on how it is, I will give it a proper explanation for you to understand it. So I will also tell you how to enter your trade. Now let's look for another imbalance. Yes, look at this imbalance here. Look at this imbalance. Look at this imbalance here. Sorry, there's a little mistake. Let me redraw. Now look at this imbalance here. You understand? This is what they called imbalance. You understand? This is what they called an imbalance. Yes. So when it's later meets to this price, that is where you call it inefficiency. And for you to enter your trade, let's take for instance, you entered a sell trade from this point. Let's take for instance, you entered a sell trade. For instance, look closely to it. You see that it gives a nice profit. You understand? Let's take for instance, you entered your trade, you short this trade at this point using this fair value gap or this order block. You understand? Let me say that we use this order block because using this fair value gap, you make you want to cover this whole order block. Using this fair value gap, you make you want to cover this whole order block, and price there's still a possibility that it might want to cross here to get you liquidated. You understand? So what you use is you use this order block. You understand? Let's take for instance, you use this order block. Even if it's one by one, I believe it's okay. You understand? You see, then your stop loss should be somewhere here. You understand? Your stop loss should be somewhere here. You are good to go. You understand? With this imbalance, you are good to go, because without this you cannot enter a trade. So let's take for instance, you want to enter a buy trade. Look close to this. This is still busy accumulating order. You understand? But when it gets to here, it creates an imbalance and creates an efficiency. So if you enter your trade here and sell it, automatically when you get here, you get a huge profit. And if you buy your trade from here, yes, automatically when you get to this point, you will be in a huge profit. Still your boy Ramsey Jr. I believe with this we are good to go. Love you. Bye.